Hi, Dr. Patrick Gentempo here, and thank you for joining us on our YouTube channel. We have great content in store for you. I'm so excited to be here with you, and let's jump right into it. Paul, here we are once again. So great to be with you. We interviewed you for Money Revealed, the original one, some time ago. We then had a conversation in Crisis Investing 2020, and I got a lot of very pleasant communications from people thanking me for doing that interview with you because it made them a lot of money. and what you recommended, just to recap, this is when COVID hit, the market was down at about 19,000 a Dow, and you said, I just took a multi-million-dollar loss as a capital loss, so I have it as a tax break against gains, and then you can buy back in and ride it back up. And you predicted back then, and we have the tape, so we're not trying to look like we're making fictional news here. You said that it's going to be a V-shaped recovery, and you explained why you thought it would be a V-shaped recovery. It's exactly what it was. And now here we are, much later in 2020 for an updated conversation around what you see going on now. So just in case somebody didn't get to see any of the prior interviews who's watching this, can we just do a quick background on you and your work as an economist and entrepreneur?
My background is really multiple careers that have run parallel. I graduated Wharton Business School with an MBA and thought I was going to go for a doctorate and even a law degree at Penn, and ended up going to work at Citibank. So I had an amazing 5-year run at Citibank, working directly for the senior officers at Citibank, and that introduced me to all types of opportunity. While working at Citibank, I went in to quit a few times, and they would talk me out of it. And after my second year, they said, I'm going to go, I want to teach. And they couldn't talk me out of teaching, so we made a deal that I could teach at New York University every Monday night, and Tuesday morning, and then go to Citibank the rest of the week. And that became my life for the next few years, actually 21 years. So for 21 years, I taught every Monday at NYU.
What were you teaching?
Teaching originally finance and then all economics. And that's when I started writing books. So I was teaching at NYU for 21 years. I was starting to write books as an economist and giving lectures. I worked at Citibank for the first 5 of those years. And then I left Citibank and went on my own as an entrepreneur and went into the White House. So for the 21 years I was at NYU, I was stationed from Moscow, a lot of work in China, lots of fascinating projects for Washington, and also managed to put together some real estate deals in the Soviet Union, former Soviet Union, in Czechoslovakia, and of course the United States. So I really was an entrepreneur, mostly real estate development, an economist, writing books and working in the White House, and a professor. I love teaching.
So maybe for reference points, people would say, what books? You've written several books.
11 books.
11 books at this point. I've read, I don't know if I read them all, but I read a lot of them. And Unlimited Wealth was one that impacted me before I ever met you. And I know that you also have spoken on platforms like for Tony Robbins and
Unlimited Wealth is painful for me. It was well received. It was apolitical. It was well received on both sides of the aisle. People could like you then, regardless of what president you worked for. And the comment I often get today, Pilzer, isn't he that Republican guy who wrote Unlimited Wealth? Has he done anything good since Unlimited Wealth? So Unlimited Wealth has sort of become my magnum opus. And I hope to beat that with a redo of it, which I'm writing right now, called The New Roaring Twenties.
And we'll talk about that because I remember pre-COVID we had the conversation about your perspectives, and I'm wondering if what's going on now in the world, if your view on these new roaring 20s is going to change. So let's start maybe high level. So now we're much deeper into 2020. There's all this polarizing political environment going on. COVID is still a reality, a lot of controversy around that. What is your updated view economically?
Economically, I believe we're in serious trouble. But I'm going to qualify that. The stock market's going up. And the stock market will continue to go up, as I talked about when the last time we met 6 months ago. Normally, that's a conundrum, because the market should reflect in the stock of the companies what the opportunity is in the marketplace, in the economy. The economy is going down and down in GDP. And I'm very worried about it. More important than that is the economy is bifurcating. Some businesses on one side of the street are doing very well, or at least well, or better than they were before COVID. Some businesses on the other side of the street are doing terrible. And what it really comes down to is what I've been saying for decades, is it's which side of technology you're on. And when I first met you, are you making CD-ROMs or you're making cassette tapes? Well, you better put your stuff on CD-ROMs, on CDs, and move it all into now virtual. So it's you bet on technology in any platform or any business you go into. At some point, you're dependent and enjoying the rewards of that technology. But guess what happens? The technology changes. And how you deal with those changes and deal with those platform changes determines whether your business is going to succeed or not. So we find very similar to fashion. You make short skirts, you make long skirts, and you take a bet each year. I grew up in the garment business, and I would watch my uncles and relatives take a bet on one particular area of fashion or the world, and then make a lot of money or lose a lot of money based on where they write. And technology is pretty much the same. What we're seeing in COVID is everything that's been happening in the last 10 years is still happening, except it's happening at 5 to 10 times the speed. Because we're retooling so much of our economy in COVID, because we had robots, that's what my new book's about, ready to step in, so we have unlimited labor. Before we never had labor to match, they had zero, when the economy took off, you went from 5, 6, 7% to 2, 3, 4% unemployment. Well, today we're headed towards unemployment might be 20, 30, 50%, but the economy's soaring in sales of certain businesses that can use robots to make the pizza instead of labor. You start to see that we're on new uncharted territory, almost as if we went to another planet where I drop a ball and it doesn't fall because the rules are different.
Right.
The rules of economics post-COVID are different and changing so fast. And changes that used to happen in 5 to 10 years are now happening in 1 or 2 years because people are implementing new technology so quickly.
I need you to explain something to me because I don't understand it. Why, if GDP is declining, is the market going up? How does that, aren't they supposed to be sort of related to each other? Not in an inverse way?
Theoretically, yes. But what we have happening now is no place to put the money. You think the market's going down. You think bonds are at 0%. So you sell your asset and take the cash. What do you do with it? There's very little places to put it. Before, the fixed income market, bonds, mortgages, were a good, safe place to put it. And you get less return. But you got 5%, you got 4%. Right. Now we're seeing a fixed income market from an investor standpoint of effectively zero. You buy bonds, you get a return of zero.
Wow.
Why do you get zero? Because there's so much money around. And the Fed has said, but if it ever went down, we're committing for the next few years or indefinitely to pouring money out there.
Where's the money coming from?
The money is coming from people selling things and having a huge, huge surplus supply of money. So they go to buy a bond. And remember, the price of a bond is inversely proportional to its interest rate. Suppose there's a bond, an instrument that yields you 5%. I go, hey, I'll buy that and earn 5%. And you say, I'll buy it at a higher price, which only yields me 4.5. Another guy shows up, 4%. Overnight, these rates have been bid down to zero in the free market. That's before we get to the Fed priming the pump and printing money.
So are the interest rates, so this is interesting, so are the interest rates at near zero or zero because of the bidding war, or is it because of the Fed's policy?
So the bidding war is just supply. There's too much money. Money from the private sector selling what they have to liquefy it and put it somewhere. And they're worried, so they don't want to put it in equities, they want to put it in bonds. Well, they bid the price of bonds so high. Then you've got the government committed to printing money as we need it and handing it out to people. We don't want a revolution, and I don't mean that as like a one-liner. I mean that serious, violent revolution. And what we're doing very well is, as we did under the original COVID PPP and stimulus package, is we're handing out $1,200, $1,000 checks to people, and we're saying, please spend it. Because you were, and how do we know you're a good guy and should get it? You paid taxes last year. So we took everybody who paid taxes electronically back in March, and we sent them checks for thousands of dollars per person in their household. And that stimulated the economy. That kept people buying rent. Now comes the scary part. We're no longer giving people cash because we're worried about inflation and other areas we need to manage. We're telling people no foreclosures. Sounds simple. You won't lose your house. We'll have a no foreclosure rule. But what happens when the guy who owns the building, the landlord, can't pay his utilities, can't clean the building, can't have security? All of a sudden, the building falls apart and everybody's evicted, not just you.
Right.
It's a very scary environment.
So commercial real estate is like in big trouble right now.
Yes and no. There's two different theories. I play this out in commercial real estate because I sit on the board of some very large real estate investment funds. And in real estate, we don't know what's right, what's wrong. For example, in real estate, there's a theory that everybody's going to work from home. And when they work from home, they won't need any commercial real estate. So the demand for real estate is going down. There's another theory that people are going to work in the office are going to need twice as much space because of social distancing. So you need double the space because of social distancing, but you need half the space because I'm working at home. I don't know. It's really what is your industry, what's best for your customer, what's best for your model. Right. We no longer can say buy REITs because real estate's going up or the real estate's going down, because we've got this animal out there called COVID, a living thing, COVID, that operates and changes all the rules. It's as if we flew to a planet where there's no more gravity, there's no more sunlight, it's pitch dark. What are you going to do? I don't know what we're going to do, but that's the environment we as business people face right now. There's so much uncertainty, and it's uncertain for each business differently.
Thanks so much for being here and watching that video. And can I ask you to please subscribe to our channel so you can find out when we're posting new content. You'll be alerted right away when we do. To share this with people you think might benefit from the information, and certainly it helps us if you like the video. So if you like what you just saw, go ahead and hit that like button. And again, thank you so much for being here with me right now.